Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 5th, 2023. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. These actions are what keeps this channel going. Thank you for them. This week, we will look at stocks and junk bonds. I think junk debt predicted the resilience in stocks. Dollar could rally, and as a result, gold could at least take a pause. However, gold did hit a 52-week high and is approaching all-time highs. Natural gas, a topic that is dear to many traders, could it collapse another 30%, or is this the bottom? Make your comment. If you are a subscriber, stay tuned. We will cover lots of various securities, for example, Bitcoin, Ethereum, and crude oil and copper. This week will be covered in the members only. Such stocks as Brazil, China, Caterpillar, American Express, as well as some of the more speculative shares like Airbnb, Arrowhead Pharma, Aurinia Pharma, Weight Watchers, and C Limited, as well as Riot Blockchain. Neogenomics will be covered in the members only section, and also we will cover gold related stocks in the members only section. Great, so we're looking at S&P 500 right now. Just gonna turn everything off. So on this chart, as always, I have my indicators. You can find out more about them by going to the description of the video. The indicators basically show good price levels to buy or sell security, and it shows what's called support and resistance levels. So support comes when a security is in an uptrend, and resistance comes when the security is in a downtrend. In this case, we're looking at S&P 500 already breaking into an uptrend where I'm hovering right there on 13th of April. So this is the beginning of a new uptrend for stocks. When, in this case, S&P 500 closes above the blue support resistance line, this is what I consider a new uptrend. Vice versa, if we see a close below the yellow line, as it happened right there where I'm hovering in April of last year, 2022, that is the beginning of a downtrend. Notice that I give a preference to the bulls. The uptrend, this is what's called the bullish bias, because stocks, generally speaking, tend to go up. So I give preference to the bulls, and I wait until security closes below the yellow line until I say that we're no longer in an uptrend. So now we're clearly in an uptrend because we have closed above the blue line on 13th of April. And now we're looking for basically opportunities to buy. I mean, I would be buying right now. In fact, I have several positions in stocks. But even right this instant would be a decent time to be buying. What we're looking for right now is we're looking for a breakout above this high from February 2nd. I'm hovering over it right now. So this high from February 2nd was at 4195. 4195 is the number, or what do you call it? The number level for S&P 500. Also around that same area is my green line. So usually that's what we call resistance. So we need to overcome this resistance. I think once we overcome this resistance, we will be in the clear, and we will continue to approach all-time highs. So we can look at S&P 500 looking at the same chart, but looking at a more longer term trend. We're looking at weekly chart right now of S&P 500, and basically there it is. So the beginning of an uptrend where I'm hovering right now is right there, where it's the same price level at 13th of April, same price level, just on weekly charts. And when you use my indicators on weekly charts, make sure to change the settings to 52. If you're using my indicators on daily charts, daily means each candlestick is a day's worth of activity. leave the length as 250. So looking at the weekly charts, notice that we did break out right there where I'm hovering on 13th of April. Additionally, we're approaching new all-time highs. So all-time highs from today's prices are 16% away, maybe a little bit over 16% away. Is that a lot for stocks? Yes and no. It's I mean, it's a little. It's not like huge amount of movement for stocks because stocks could move quite, large amounts. But really, the point of the matter is that we are now in an uptrend, and we're looking for new highs for the move, new 52-week highs, and eventually new all-time highs. So on this chart, I have already shown this potential pattern. So I'm going to draw it in again, and this pattern is sort of like that. So we have a move up to new highs, and then we have a dip. And remember, this is a really huge chart. This is a weekly chart. So this dip is, a whole year's worth of activity. And so this is kind of what I'm looking for right now. So we have a move up from the lows in 2020, the pandemic lows, up until the high in the 2021, up until the high in January of 2022. Then we have a Russian invasion of Ukraine, which still continues, but hopefully it'll come to an end pretty soon. And I think that at this point, once we hit new all-time highs, when we hit all-time highs, we will continue higher and most likely duplicate this move up from the bottom in 2020 on the upside. So how much is that? So once we break out again, we need to look at the pattern. So yeah, this is going to be a very significant move. This is a 100% mover. So as I already said, once we break out, that could be duplicated. But I think more reasonable to expect a move of the depth of this pattern. So this pattern depths from the highs in January of 2022 to the lows in October of 2022 is around 1,000 points. So we can see that about that much duplicated on the upside could be around there. So we're looking at around 6,000 for S&P 500, probably in the next year or maybe year and a half to 2 years. So again, I think once we break out to new records, that would be a good target to consider. Now, in the previous video, I mentioned the same levels, and of course, people who think in fundamental terms, so meaning that I'm not thinking, as you have just heard me say, that I didn't say anything about price to earnings ratio or inflation expectations or policy of the Federal Reserve or labor market, etc., etc. So these are all fundamental perspective. I don't think in those terms. I think in terms of technical. So this is what's called technical trading. So if we do break out to new all-time record highs, then a move of the depth that I just described, around 1,000 points from the October lows, from the January 2022 highs to October lows, the depth of this pattern is about 1,000 points. It could easily be duplicated on the upside. What would it do to the various price and earnings ratios and various inflation expectations is not really my domain, so to speak. However, if you have opinion about it, please do write it in, make a comment, and we'll see if others agree with what you have to say. But my prediction is if we break to new records, then we will continue significantly higher. But for now, we need to, the most important thing on daily chart, notice this high from February 2nd of this year, 2023. We need to overcome that high, finally. So we're approaching that level. We're super close to that level. That level is at 4195. We're currently at 4136 for S&P 500. So it's just a few percentage points. So we need to convincingly break out above that level. So if we have a nice big green candlestick, and especially if we have a nice big green candlestick on weekly close, like on a Friday, then I'm fairly certain we will at least get to around 4,500 fairly quickly. So we're currently at 4,100. And then if we break finally above this February 2nd highs, I think a move of another 8 to 9% is quite reasonable. Again, where am I getting this from? I'm getting this from the depth of this little pattern. This little pattern that started on February 2nd, bottomed out on March 13th, right there. And now we're approaching the breakout level above the February 2nd high. So if that happens, I think easily 9%. So we're looking at S&P 500 around 4,600 or so. A S&P 500 of about 4,600, looking at weekly chart, is going to be basically this high from August 2022. Okay, so we're looking a move to just there based on this daily pattern. Looking at NASDAQ, NASDAQ looks stronger. NASDAQ is already above February 2nd high. I'm hovering over it right now, February 2nd high. So this is the pattern I'm referring to right now. We have a low in December. We have a move up. Then we have a shallow pullback and a breakout above that shallow pullback level right there on Thursday, March 30th. We're now above that level. So we actually have already broken out for NASDAQ. Notice that we're kind of trading sideways, and today's level, today's close, actually one of the highest so far since the December lows here. In fact, it's highest, one of the highest closes since October lows even. So this pattern again, we're looking to duplicate the previous move up from at least December lows into February highs. We're looking NASDAQ of around 14,600. So from today's levels, we're looking at NASDAQ about 9% higher. I am personally long QQQ, long meaning I bought QQQ. I bought QQQ, the NASDAQ 100 ETF, right there on January 20th at $280.26. We are currently at $322.89, and we're moving higher. In fact, once again, today's close was the highest close. We haven't yet broken above the high from Monday, the 1st of May. However, once again, this is good news because NASDAQ is more volatile, and it is indeed leading. It seems to be leading the stock market higher. Though looking at Russell 2000 small caps index, so Russell 2000 represent various small cap companies. It did also break out. There's the breakout into the new bull market, into new uptrend right there on February 1st of this year, 2023. However, we have a very deep pullback that unfolded back in March, and we kind of bottomed out around late March here finally. So this was caused by a collapse in Silicon Valley Bank and various banks, small cap banks as well, small lenders as well. Finally, we seem to be bottoming. In fact, once again, on yesterday when we touched this yellow support resistance line, but so far have failed to break below it decisively. In fact, today everything rallied. Russell 2000 was not an exception. It rallied as well. A strong close for the week. And, we're looking again, we're right now, Russell 2000 small caps index is already in an uptrend in a bull market. The downtrend has not reversed out of it yet. So it's looking pretty good. I will keep a bullish bias positive outlook for stocks for now. Here is one of the biggest reasons why I am so positive on stocks. Here's junk debt, symbol JNK. JNK broke out also here in February of this year, February 1st of this year, 2023. It also has broken out into a new uptrend by closing above this blue support resistance line. You can find out more about them by going to the description in the video about these lines. Confirmation of this posture, of bullish posture, came right there on Friday the 31st of March. And since then, notice that we basically traded sideways. Contrast that to S&P 500, which we had two pretty significant dips right there when we bottomed out on 26th of April, and again when we bottomed out yesterday on the 4th of May. So contrast that with junk debt, JNK. We barely budged. There was barely any movement to the downside. So when I see things like this, I wrote it here to my subscribers, selling was muted. So junk debt, high yield bonds so far have not confirmed the strong selling that stocks have experienced. Notice how big the movements were for stocks, and notice the high from Monday the 1st of May into Thursday the 4th of May versus the movement for junk debt, high yield bonds, where you can barely see it basically. So again, this is the reason why I think that we have a positive expectation for stocks, is because high yield bonds, in addition to other factors, but high yield bonds have a high degree of correlation to the S&P 500, and therefore I will consider high yield bonds indication that they were not selling as a good reason to keep a bullish bias on stocks. Looking at dollar, here's DXY, dollar currency index. Dollar currency index was until relatively recently in an uptrend. The final gasp of this uptrend occurred right there on the 21st of November of last year. That turned out to be a bull trap. Bull trap meaning that the stock, in this case, the index gave us a buy signal by closing above this blue support resistance line, but then turned around and continued lower. I did not send this alert out. In fact, I strongly considered it at that point already a bull trap. This is more from experience and looking at thousands of charts. So looking at this particular chart, the downtrend for the dollar began right there on the 12th of January 2023, where I'm hovering. Yes, we had a big pullback. And actually we had a low right there on the 2nd of February. And we had a relatively big pullback. Now we had a couple of more signals to sell short right there. Latest one was right there on the 17th of March, which was successful. Dollar index currently is approaching very close to this February 2nd lows where I'm hovering. So I'm going to go to weekly charts once again. Weekly meaning each candlestick is a week's worth of activity. So looking at the dollar on the weekly chart, you can kind of see, I turned off the indicators right now. You can kind of see where I'm referring to here. So there's the February 2nd low where I'm hovering, meaning, okay, so this is a weekly chart. Each candlestick is a whole week's worth of activity. On 2nd February, the low was put in where I'm hovering. We had it bounce into March, early March, and then a lot of selling. And then once again, was trying to bottom right there, right around this low from February lows. So right now, if we make especially if we make a closing low below this February 2nd low, then I'm fairly certain we will continue lower towards, and the depth of this movement to the downside would be the depth of this pattern that I just described, from the lows on February 2nd to the highs on March 6th, and again the lows on April 10th. So the depth of this pattern is around 5 points for this index, or about 4.5%, about 5% almost. So once again, if we have a closing low below the February 2nd lows, and I think we will continue lower around 5% more. So a break below this low would indicate, if we see a close below this low, February 2nd, once again, we will most likely collapse lower. The opposite is also true. Dollar is quite oversold, and I expected at least a mild bounce. So far, we did not get even a mild bounce. If we do get a mild bounce, so let's say we bottom here and we rally. So we rally towards a logical place. We rally towards this red support resistance line. Once again, before we were able to sell short at that point. We will look at gold next, because gold is important when you trade, or rather, when you trade gold, you need to know what the dollar is doing. Dollar was under pressure. Gold rallied. In fact, this right here is a 52-week high for gold that was set yesterday. Looking at weekly charts of gold, gold is indeed super close to all-time highs. Okay, so an all-time high was set in August of 2020, right there. It was at 2089.2 for gold. Okay, so we're literally at that level. Now, if you look at this chart, it pretty much jumps out at you, and this is what's called a cup and handle pattern. So I'm going to draw out a cup and handle pattern right now. Here's the cup, and here's the handle. All right. So a cup and handle pattern in classical chart readings is a bullish continuation pattern. So meaning that if we break above this lip, we call it the lip of the cup, and when I say break, I mean we need to close above it. So if we see a 2000, a close at, let's say, 2095, especially on a weekly basis, then we will say that yes, we have indeed broken out above this lip of this pattern. The depth of this pattern is around 25%. So again, in classical, chart reading, this is how we read how we estimate the continuation of this pattern. So if the depth of this pattern, well, it's 424 points, $424 rather. So we're currently at 2089. So if we break to that, if we break out, and then there is a good chance we will continue towards that target that I just described, which puts us at around 2,500 for gold. From today's level, that's another 20 to 25% higher. So again, a reasonable target to expect, provided dollar at least doesn't rise. As I just described, there's a good chance dollar will simply continue lower from here. As I just described, there is a good chance that dollar would actually continue lower, especially if we break below this February 2nd low. Okay, so what do you guys think? Do you think my predictions about gold are too optimistic? Do you think I'm too bearish on the dollar? Make a comment. Let's move on to the topic that everybody wants to know about, and that is natural gas. So natural gas is undoubtedly in a downtrend. I have shorted it myself right there where I'm hovering on Monday, the 19th of December. Unfortunately, I got out somewhere around January, which still was a hefty profit. We're currently possibly bouncing along the bottom. Okay, so this is just, I'm going to turn off the indicators for a second. So we seem to be bouncing along the bottom. We made a low right there on 22nd of February, bounced a little bit, and then again come down to it. Moved a little bit along the bottom until April 14th, and again bounced into 28th of April right there. And again, we're now once again back to this bouncing along the bottom level. So will this be, will this time be the charm? Okay, so let's try to look at natural gas on the weekly chart. Actually, it's not that obvious. Well, let's do first just purely look at the price action on the weekly chart and see where things stand. So this is today's levels. We're at 2.137, $2.137. So the next support, just from purely technical perspective, is somewhere around January 2020 lows, right there. So if we break below these lows that I just described, the lows were set on 22nd of February, where I'm hovering. If we break below those lows, February 22nd, then easily we could continue towards January 2020 lows, which is around another 31% down. All right. So looking at this chart, we can also look at it. There's the depth of this pattern. So depth of this pattern from February 22nd until March 3rd is around 34%, or about $1. So if we duplicate the same pattern on the downside, it's about $1. So we're looking at about $1 for natural gas. That's what it looks like. On the weekly chart, it looks about $1.50 for natural gas, because next support level is around 2020 low. So we're looking for a move if we close below February 22nd lows. Okay, only in that case, if we close below that level, we're looking at around 30 to 50% movement to the downside. Okay, can this happen? Sure. Make a comment if you think that is likely or if it is not likely. The opposite is also true. Now we need to estimate where we could possibly bounce. All right, if we kind of try to get through this level and we don't close below it, especially on a weekly basis, if we don't close below February 22nd levels, then a rally is possible as well. And the first target for the rally is the yellow line, which is at around $3.28. So that's very much possible. And second target for the rally would be at around $4.97, which is the red line. So we're literally at a critical level, and we could go either way. Right now, I don't have any positions. However, if you want to buy, the risk is low. And if you want to sell, the risk is low, relatively low. Rewards are quite large in both cases. So make a comment. What do you guys think? What is your position? And do you plan to take a position? That's it for this week's recap. Thank you for staying this long and listening to my analysis. Don't forget to hit the like button. Once again, if you are interested in what I told you, please head over to MasterChartsTrading.com. There is also a link in the description. Click on sign up for one of the services. So I have trading indicators. These are the lines on this chart that show great support and resistance levels. They also show the trend. Are we going up or are we going down? Also, I have a newsletter. Newsletter is a daily. I send out daily alerts to my subscribers, and I also send out weekly videos for members only that also describe the various securities that we trade. For example, this week we will cover a multitude of stocks you can see from this chart, from this presentation. And of course, the best deal is to get both indicators and trading newsletter for $59.95. I think it's a great deal. Again, thank you for watching and have another great trading week. Bye-bye.